we are going to look at some stocks that own 2023 and have the ROEs to tear up 2024. Hold on to your seatbelts, folks. This is going to be a good one. One of the most common questions I've been getting as we near 2024 is what companies are going to do well? What is the next Hammond? These questions are not unexpected, and in today's list, we will be looking at 5 potential companies that you may want to throw some due diligence at. In fact, most of these companies may be new to the channel, and one is an old friend we have seen before. I am excited for this one as we do hunt for that next superstar for 2024. Join the conversation. Let us know in the comments if you have a stock you are excited about for 2024. Your participation is, of course, well appreciated. Don't forget to like and subscribe to stay up to date on future content, and a huge thank you for that click. Before we jump into the list, I did want to give you guys the qualifiers I was using to help me track down this bunch of potential winners. The first thing I was looking at was their performance in 2023, as they needed to represent when it comes to total return for the year. In addition to that, I also wanted companies with a return on equity of at least 20%. So that sure did eliminate a lot of good contenders. I figured that higher ROEs were a good predictor that the company is solid and should continue performing into 2024. Of course, in a worst case scenario, these are companies with fundamentals that even if they fail to perform, they are less likely to crash and burn, which is a stock I like to take chances on. So without any further ado, let's do this. Kicking off this list, we have North American Construction Group Limited with a ticker of NOA. They are based out of Atchison, Alberta, and they specialize in equipment maintenance, mining, and heavy construction services in Canada, the US, and also Australia. Their price comes in at $27.84, and they have a market cap of $558.03 million. Their beta, pretty volatile, 1.72, and their earnings per share comes in at 1.74. They have a price to earnings ratio of 11.97, and their return on equity, that comes in at 23.06%. Their debt to equity ratio, that comes in at 131.18%. Little on the high side. I'd love to see that one come down. When it comes to returns, they have a dividend yield of 1.448%. That is a quarterly dividend paid out in the amount of 10 cents per share. Their payout ratio, not too bad, 16.31%. So a very sustainable dividend without a doubt. Looking at their overall returns, on the 3-year, their return on investment comes in at a very nice looking 116.99%. Factor in those dividends, we get a total return of 123.85%. In the last year, their 1-year return on investment, that comes in at a nice looking 49.36%. Factor in the dividends, we get a total return of 51.50%. That is pretty darn good. I don't see a slowdown in construction anytime soon, which could be a very good thing for this company. Coming in at number 4, we have Cipher Pharmaceuticals Incorporated with a ticker of CPH. They are based out of Mississauga, Ontario, and they are a specialty pharmaceutical company with a wide range of pharmaceutical products. Their current price comes in at $6.12, and they have a pretty small market cap of $149.18 million. Their beta is pretty average at 0.96, and their earnings per share come in at 1.68. As for that price to earnings ratio, that comes in at 3.70. Their return on equity is very good at 53.13%, and they've got a debt to equity ratio of 0.46%. I love these two numbers. Wow. This is the only company on today's list that doesn't have dividends, so we'll jump right away to their 3-year return on investment. That comes in at a staggering 665%. Holy banana bread. Their 1-year return on investment is also pretty impressive at 62.33%. With the aging boomer population, the pharmaceutical industry is set to be very busy, and that could be a good prescription for returns when it comes to this company. Taking our 3rd spot, we have TerraVest Industries with a ticker of TVK. They are based out of Vegreville, Alberta, and they are a manufacturer of home heating products, propane, ammonia, natural gas transport vehicles, storage vessels, energy processing equipment, and fiberglass storage tanks. Their current price comes in at $43.75, of course, current as in at the time of recording. Their market cap comes in at $788.33 million, and they've got a pretty stable beta of 0.66. Their earnings per share, looking nice, 2.32, and they have a price to earnings ratio of 18.97. Their return on equity, that comes in at 22.89%, And they do have a high debt to equity ratio of 113.17%. So that's another one I would definitely like to see them bring it down below the 100, please. Their dividend yield, that comes in at 1.368%, and it is a quarterly dividend of 15 cents per share, and the payout ratio on that is 21.55%. Looking at their returns, their 3-year return on investment comes in at 175.33%. Factor in the dividends, we do get a total return of 183.83%. On the 1 year, that return on investment comes in at 62.64%. Factoring in dividends, we get a total return of 64.59%. This company does have a well-diversified catalog of products, and that has served their share price well over the last year. In our almost top spot at number 2, we have ADF Group Incorporated with a ticker of DRX. They are based out of Terrebonne, Quebec, and they are involved in the design and engineering of connections, fabrication including industrial coating, and the installation of steel structures and steel buildups, as well as miscellaneous and architectural metalwork. Their current price comes in at $6.95. They have a market cap of $224.56 million. Their beta, that comes in on the stable side at 0.77, and they've got an earnings per share of 0.90. That price to earnings ratio comes in at 7.64. Their return on equity, that comes in at 21.20%, and they have a debt to equity ratio of 32.20%. When it comes to dividends, they have a pretty small yield of 0.285%. It is a semi-annual dividend, so once again, 2 times per year in the amount of, well, a penny per share. That payout ratio comes in at a very low 2.22%. So that penny is safe. When it comes to growth, their 3-year return on investment, that comes in at a nice looking 549.53%. Factor in those dividends, we get a total return of 605.61%. Looking at the last year, wow, these are nice numbers. Their return on investment comes in at 208.89%. Factor in the dividends, and we get 217.78%. That's not too shabby. Once again, this is a company that has a lot of services that they offer, so they're well diversified, and they look to be charging into 2024 at breakneck pace. Holy banana bread. In our top spot at number 1, we have that other Hammond company, and I mean Hammond Power Solutions Incorporated with a ticker of HPS.A. They are based out of Guelph, Ontario, engaged in designing and manufacturing of custom electrical magnetics, cast resin, custom liquid filled distribution, and power transformers and standard electrical transformers serving the electrical and electronic industries. In case you were wondering how they are connected to HMM.A, they were both created by Oliver Hammond and his sons. Their current price comes in at $81.71, and they have a market cap of $969.30 million. Their beta, not very volatile at 0.66, and we've got earnings per share coming in at 5.17. Their price to earnings ratio comes in at 15.75, and they've got a return on equity of 32.36%. Their debt to equity ratio, also not too bad at 14.88%. As far as dividends, they have a yield of 0.733%. This is a quarterly dividend in the amount of 15 cents per share. As for their payout ratio, it comes in at a nice low 9.67%, so definitely super sustainable. When we look at their returns, on the 3-year return on investment, it comes in at 743.24%. Factoring in the dividends, we get a crazy 756.40%. Over their last year, their return on investment came in at 264.29%. Factoring the dividends, we get a earth-shattering total return of 266.74%. This is simply a company I love. Even though HMM.A stole a lot of the spotlight in 2023, HPS.A was often beating them in performance. I am simply not expecting a repeat of their massive 2024, but nonetheless, they should have a good year. These are some companies I do like a lot, and I think they are worthy of our watch list for sure. I will continue to scour for those unknown gems in future lists, and hopefully by year's end, people will be asking me to find the next stock X. As usual, if you are interested in any of these stocks we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Keep the learning going. Watch my video on 10 financial predictions for 2024, linked over there on the left, or Test YouTube's recommendation skills by checking out that video on the right. Your choice will decide the winner, and I will see you in the next video.